Welcome to this first in a series of videos on the basics of Forex. We're going to start from the very beginning, so it's perfect if you're new to Forex or if you're interested in learning more about this fascinating market. Even if you know a little bit about Forex already, you'll probably find that there's some bits in the series that are of interest. The videos are going to get increasingly more in depth as we go along. In this first video, we're just going to start with some of the core concepts of Forex. We'll look at a very simple example, and we'll also talk about the Forex market as a whole. We'll look at the scope of the market, its size, the global aspects, and a few other facets. So do keep watching to the end of the video so that you get to hear all the information. Hello, I'm Peter Martin with Trading 212. And we add educational videos about trading to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel. You should find a red button somewhere around about down there. That's the best way to find out when we've added new content to YouTube. Well, let's talk a little bit about Forex. In a minute, we're going to take a look at the market as a whole, how it works. But I thought a good place to start is with a kind of nuts and bolts approach, starting at the very beginning. So let's look at a very simple example of exchanging some money at an airport. So here you are at the airport, about to go away on holiday to the Mediterranean for a week or two. And you decide you'd like to exchange some of your great British pounds to have some holiday spending money in the local currency. So you head over to the currency exchange, and at the booth on the wall you notice they have a bunch of flags showing, and they have prices also showing that they're prepared to buy and sell different currencies for in sterling. Now you're heading to the Med, so it's euros that you're interested in getting your hands on, and you can see that it says they sell euros for 1.2012. That's the rate, and this means that they will sell you 1.2012 euros for every pound that you give them. Now you have here 400 pounds that you want to exchange. And so they sell you 400 pounds multiplied by 1.2012, and that gives you 408 euros roughly. So you've sold your 400 pounds and you bought 408 euros with it. And they've bought your 400 pounds and they've sold you 408 euros. Now let's say a couple of weeks later you're back from your holes, bit of a tan, half a stone heavier perhaps, and as it turned out you paid for everything with your MasterCard, which was priceless, and you've still got those 408 euros stuffed in your wallet. Now that you're back in the UK, you'd prefer to change it all back to pounds. Fortunately for you, while you were away, the euro has strengthened against the pound, and you find that the currency exchange booth at the airport shows that they will now buy euros at a rate of 1.0049. This means that if you give them 1.0049 euros, they will buy it for £1. So you can sell your 408 euros for 408 divided by 1.0049, which equals £406. You started with £400, because the exchange rate moved in your favour, you've made £6. Now, I don't want to get bogged down in numbers this early on, but very quickly, these were the two exchange rates in our example. This first one was the exchange rate at which they were willing to sell you euros before you went away. And this second one was the exchange rate at which they were willing to buy the euros back from you upon your return. Now, the exchange rate has fluctuated, and you were trading your currencies a different way round each time, but they're both a way of expressing the same thing, which is how many euros £1 is worth. The convention for writing this exchange rate in the Forex market is to use 3 letters to represent each currency, and we write it as GBP for the pound, and then often with a slash, and then EUR for the euro. So Great British Pound to Euro, And this always means that the exchange rate is showing how many of the second named currency is worth for one of the first named currency. So in this first instance here, £1 is worth 1.2012 euros, and in the second instance, £1 is worth 1.0049 euros. And so we can see that the second number in comparison to the first number shows that the pound is worth fewer euros. So we can say the pound has weakened or the euro has strengthened. Now in reality, the big difference between the buy and sell price at such currency exchange booths would make turning a profit like this unlikely, which is why you would only use a currency exchange booth for changing money to go on a holiday. You wouldn't use it for actually trading Forex. But regardless, the principle that you can make money from fluctuations in exchange rates is at the heart of the Forex market. So let's now talk about the Forex market, what it is and how it works. So the Forex market is a market that allows participants to exchange one country's currency for another country's currency. In other words, to trade currencies. And it is the Forex market and the trading that goes on in that market that determines exchange rates. The Forex market is the most actively traded market in the world. It is a vast market. It is extremely liquid, and we'll look in future videos at some of the benefits of that high liquidity. The volume that trades on the Forex market is in excess of $5 trillion per day. And that's far greater than the combined volumes of trades that go on with equities on stock exchanges all around the world. The World Bank estimates the total volume of equities traded in the world in 2018 was $68.212 trillion, and that works out as being roughly $261 billion per day. So we can see in that comparison how much larger the Forex market is. It's somewhere in the order of 20 times larger than the volume of global equities traded each day. And the Forex market has no single center of operation. If you were looking to trade equities, let's say UK equities, then trading would center around London on stock exchanges there. If you were looking to trade US equities, then trading would be centered around New York on stock exchanges there. But with the Forex market, there is no single center. Trading spread out around the world, as we'll see in a second just how global a market it is. And the vast majority of trading doesn't happen on exchanges. The vast majority of trading is off exchange. It's what we call over-the-counter, OTC. And the core of the Forex market is the interbank market. The majority of the volume of Forex trading is between very large banks where they offer each other favorable exchange rates in terms of the closeness of the buy and sell prices. And retail clients can access the Forex market via CFD and FX brokers. As years have gone by, the prices that retail clients have been able to access, the exchange rates, have been more similar to the interbank market in terms of the closeness of the prices at which you can buy and sell currencies, as we'll see in future videos when we get into looking at what we call the bid-offer spread. And it's this idea that the Forex market has no central location that allows it to be a truly global market and also a 24-hour market. So let's talk about this now. The Forex market is a truly global market. As we said before, trading does not revolve around one single center. Instead, as the day progresses, where the majority of trading occurs will shift across the globe, just as the sun appears to track around the world, with trading beginning on any given day in Australasia and financial centers like Sydney there, and on to Asian financial centers like Tokyo. During European trading hours, volumes will pick up in places like Frankfurt and London. And then later on in the day, trading will shift to New York, before shifting once again back to Sydney and then on to Tokyo for the new trading day. And this constant shifting of activity across the globe as days blend from one to another means that the FX market is open for business 24 hours a day. The only time it shuts is at the weekend. Well, I hope you enjoyed this very first introductory video to the Forex market. If you did, please take a moment to hit the thumbs up button and give us a like. Or why not let us know what you think about the Forex market? Are you just starting to get involved? Share your thoughts with us in the comments section. We do read each one. Well, that's all for now from me, Peter Martin, and Trading 212. I'll see you next time. Goodbye.